Hello, thank you everyone for joining Tiger Brokers live webinar. This is Jack. Today we're going to talk about risk management. And thank you, Jeffrey, from Hippo Wealth. And today we're going to talk about budget planning, a little bit about SMSF. However, more importantly, about insurance in general, in particular life insurance. Through my finance career, a lot of people can understand the importance of life insurance. However, life insurance sounds easy. However, if we dig into the details, there are a lot of nitty-gritties to understand. And for example, a lot of in what situations and what sort of claim can be made. Because to buy into life insurance sometimes could be easy. However, better to speak to professionals because when during the rainy days, life insurance is then when you look back into life insurance course, you want to make sure the life insurance can actually cover the risk that you are trying to protect. So that's why we have Jeffrey from Hippo Wealth going to talk about risk management today. I just pass the microphone to Jeffrey. Thank you, Jeffrey.
Thank you, Jack. Thank you, everyone. Very honored to be a guest speaker at Tiger Broker and to share my experience and expertise on the wealth management and risk, particularly in the risk management side, so that we could explore the fundamental of the wealth management, which essentially is risk management. I will go through that one by one, but I just quickly introduce myself. I've been in Australia for nearly 20 years. I have been a financial planner and planner coach. So I'm coaching financial planner nationwide in Westpac from 2013, 2016. Then later on, I joined a family office. I'll be a general manager, and then started my own business called Hippo Wealth. Um, Part-time, I'm a business mentor at the UNSW Business School to coach the year 3 students about the wealth and business growth as well. So I'm very happy had this privilege to share about my experience. To begin, to start with, I just want to share that everything we discussed today is general in nature and does not take into consideration your um, objectives and financial needs. If you ever need to have a more detailed conversation about the situations and the cases that applies, and also you want to customize your solution, please speak to a financial professional and specialists. Thank you. I want to start with the next page. Okay, so this is my AFSL from 2016. I've been a financial advisor. Now under Hippo Wealth, we have a AFSL as well, provide financial service. This is my highest financial planning certification of BZA. So as you may know that in Australia, everything you require a license, even a plumber, even a cleaner, even anything, you need a certificate, you need a qualification. And also for my professional, you need to at least meet the requirements of financial advisor national certification. And this is my university qualification at Sydney Uni, 2008 to 2010. from business school, majoring commerce, accounting. On the right side is my qualification for self-managed group fund, advice as a financial advisor as well. So it was in 2018, it was obtained. And then there's a financial planning diploma and advanced diploma, particularly in the area of insurance. We have a tier one insurance broking um, for the insurance advisor for the general insurance as well. Okay, so how I started this path, I just want to start with a quick story. In 2018, there is a national news. It's on national news that there's a family. The fire got into the house, and the house was burned down in literally 10 minutes. And both mom and dad got burned and was put in the ICU. And later on, the family has asked me to help assist with all the insurance claims. And in between, I've been, speaking with various professionals and insurance companies, and also to find the document and find out there are a lot of things that's not in place and takes makes it hard to make a claim in the event when they actually need it. So that's why I started looking into this industry and see what value can we add, what else can we do so that more people have this awareness and also have the right people aside them to help them when they actually need it. Um, so okay, the result is I help them make a really big claim to help them, at least repay the loan, the mortgage, and everything. And the people have survived with two children, and then they now still living in Sydney. We're good friends as well. So I just want to make sure a lot of people they know whatever you work hard for, it can happen in a split of a second because we don't know whether tomorrow or the accident, which one comes first. Okay, so how do we know if we're doing the right thing? What does wealth management mean? Wealth management or financial planning or finance planning, what it does it mean? Three things. One is to protect your current income, protect your assets, whatever you already got. That's called protection. Second thing is creation. How can you make your money work harder for you instead of you working for money? I just had a conversation with a doctor this morning. He's my client. He wants to have more passive income. That's great. What does passive income mean? Passive income means even if you don't work, you still have income coming in. How do you do that? Okay, you have money work harder for you instead of you work hard for money. Okay, so that's called wealth creation. Last thing, preservation. How can you pass the wealth to the right person? You need to determine this while you are clear, you are responsible, and you understand your goals and your situation. So all these things needs to be done beforehand, not after things happen. So this is very important. That's why I always say wealth management is risk management. Without risk management, wealth management can be broken in one night. What risks are we faced? Okay, first thing, income risk. What if we are unable to work one day? What if something happened? It jeopardizes our ability to earn an income. What if something happened that our lifestyle cannot be maintained? What happens if our children needs to go to school and needs money to fund them on the growth? How can we pay for the daily expenditure or even the mortgage repayment? Okay. What about the inflation? What about the tax expenses? How much tax we're paying? How much unnecessary tax we're paying? What about the market risk? Also, if you have a house and you have a mortgage, what happens if your mortgage, cannot be paid? If something happens, you cannot repay your loan, and the bank might take your property for force of sale. How can we protect what are important to us, our assets, our loved ones, our income? These are the most important questions we need to think about. Not when things already happen, but before things happen. Okay. Um, I'll spend a quick time to understand the current Australian wealth landscape and also the insurance plans and risk management plans. If you're Australian citizen or permanent resident, you know that you have Medicare. That is your public hospital system to help you repay the expense as a refund your expense, so you don't have to spend the money for certain items. So for medical benefit scheme, so it needs to be under that um, public hospital system. If you have to go to the private hospital, then you need to have private insurance. Private insurance is basically if you don't have a very severe illness and then you need to wait and you don't want to wait, you need to go to a private hospital. And the private hospital will charge you money if you don't have private hospital cover. Also, there are other tax benefits you can use. Say if you earn an income over I think 90 or 90 something thousand a year, you need to pay the Medicare levy surcharge. If you have hospital cover, you can have an exemption for that. You can save more tax while you have protection. Okay. What about the income cover? What we call personal insurance. And that is basically no matter whether you go to a public hospital or private hospital, you need to have a personal insurance in place so that you can get money. You can get an income, whether it's a lump sum income or monthly benefit. At least you have an income. Why do you need that? Because income is how you can cope with your life expenses, out of pocket expenses. For example, repay your mortgage, for example, pay for your children's education costs, your lifestyle costs, support your spouse, or even invest. Even if you go to another place to really have the what do you call the treatment. If you go to Singapore or the US, have a better treatment. Okay, so that's for personal insurance, and then you have asset insurance. So for asset insurance, basically, it's uh, your investment that you put money in a structure, say superannuation, family trust, or investment bond or insurance bond. That's basically for investment, but it's under within a certain structure. Okay. And then for business cover is basically protect your business or your property or your responsibility, your indemnity, professional liability, or even public liability. So these four areas covers basically every category of insurance you may think of. Maybe there are other insurance, the minority insurance like pet insurance. It's also fall under the general insurance category. Okay. Okay. I demonstrate three pictures of um, make you easy to understand. If we have assets, we need to protect the existing assets, right? That's the things we own. And then if you have a business, you have a professional, have a profession, you need to protect your money earning profession or career. Okay? And then if you don't have that, if you don't have that, you're working for someone, you need to protect your own income. Or if you're running the business, you also need to protect your personal income as well. Okay, so a lot of people buy insurance for property or car, or even for their pet or bag, or professional or insurance for their business as a public liability or business pack. But the most likely forget the most important asset in their life, which is you. You are the most important vehicle, most important asset in your own life. Because if you not healthy, if you have some risk, you cannot even utilize the assets, the things you own. So I always want to express this belief and this big important idea that you are the most important asset in your own life. You are uh, okay, so that's very important. And then what's the value of the insurance? Insurance has three main values, although they have many other more, but I list these three things as the main value, especially in Australia, with the highest tax benefit, with the highest tax bracket. The first thing, the, it transfers the risk. That's the fundamental value of insurance. Transfers the risk that you don't want to bear to the insurance insurer who are willing to bear the risk for you with exchange for your premium. Okay. Um, Second thing is tax benefit. There are certain insurances, whether inside super or outside super, it has tax benefits so that it can reduce the tax you pay, or you can take advantage of the tax benefit. And the third one is protecting your income. It really gives you the income in the event of you not able to working as a passive income. That's what we discussed before. Um, as you can see from, I think this is the most, not the most recent one from 2021 to 2022. I think they got changed. But the highest tax bracket, as you can see, is 45%. Okay, if you're over a certain income threshold. Please refer to the ATO for the most recent data. I think this one is a little bit out of date, but it's around that percentage. Okay, and we need to use wealth protection to protect the tax benefit that belongs to us, or also the income that belongs to us, even for future replaceable income. That's also something we need to protect, not just the current one, but the future one. Also, the most magical financial vehicle, superannuation. Okay, what does super mean? I think today there are a few people that I invite to come to this live stream as well. They have some questions about superannuation. I hope you listen to this very carefully. There are three main types of superannuation, which I regard as economy class, first class, and private jet. Economy class is basically group super. For example, Australian super, host class, uni super, um, whatever the rest super. You're in a big pool that you actually you're a member of the super fund, and basically um, you are following whatever you are provided with. Okay, if you go to an economy class, you'll have chicken or fish. You don't have many choices. Okay, and then there's an upgrade for first class. It's called a personal super. But the personal super, basically, you have the access to more personalized investment. For example, hundreds of managed funds that you can choose from. You can do asset allocation, portfolio management, model portfolio, whatever it is. And then we come to the last one, which is the luxury one. And that a lot of people is curious what it is. It's called self-management fund. So self-management fund basically is a private jet. You are the owner of your super fund, and you are managing your super fund. You're taking the responsibilities. You need to hire the responsible manager, specialist in this process. So you have a team of specialists to help you. Okay. Regardless which category you are, there are three main benefits of superannuation. Firstly, wealth wealth protection. Okay, because superannuation is a trust structure, and everything in your trust structure is protected against your creditor. So if you borrow money from someone, and if something happens, you get bankrupt, they cannot pursue the assets inside your super fund, right? That's got the protection value. On top of that, you have insurance. Normally, you cannot use your super to pay for to spend for your own benefits, but insurance is an exception. You can use super before you retire to buy three types of insurance: life insurance, TPD, total permanent disability, and income protection. Okay, and then you have wealth creation, which is the investment. And you can use the wealth creation to invest in debt, equity, or property, depending on which category you choose. Last one is tax optimization or minimization. I put a three numbers: 15, 10%, and tax free. Okay, how does that work? Okay, imagine your super has two buckets. One is accumulation bucket, the other is retirement bucket. Accumulation bucket is basically you put money in, but you cannot take money out. And then once you retire, you put it into retirement bucket. And the retirement bucket is basically you can take money out, you can't put money in. And at the accumulation page, and then at the time of your retirement, you can transfer certain amount from your accumulation to your retirement. And from your accumulation, you have annual contribution cap that you can put it in to increase your super balance. I put a 30,000 as a concessional contribution or 120,000 as non-concessional contribution. So concessional contribution has a minimal tax benefit of 15% compared to your marginal personal tax rate. And once your money is in your accumulation account, you can, for example, invest in property or shares, and then the earning, which is the dividend or the rental, is charged at 15% tax. And then if it's over 3 million, the balance is 30%. But normally, if it's less than 3 million, it's 15%. And then you get a capital gain tax is about 10%, which is if you hold it for more than 12 months. Okay. And then at the retirement time, on 1st of July 2023, you get a transfer balance cap of 1.9 million to actually transfer the money. Okay. That's if you meet the preservation age and the retirement requirements. So you meet the condition of release. And then once you're in the retirement phase, you have two options. You either can withdraw the money as a lump sum payment or you can take income stream. But whatever you withdraw, everything in the retirement account is tax free. So the money you make in the retirement is tax free. Okay, that's the most tax effective vehicle in Australia. And if you haven't used it, if you ever want to use it, please consult, ATO website. There are a lot of information out there, or speak to a specialist um, like myself that I can share with you the right information so that you can make your informed decision. The most important problem we have is we don't have the relevant information, and a lot of people make wrong decision based on wrong information. Okay, so that's trying to avoid making mistake by knowing more about the system, and then you can make information that's beneficial for you. Okay, let's go to the insurance. Okay, I talk about that there are three insurance you can buy from the superannuation. One is life. That's when you get a lump sum payment if you're in the event of death or the diagnosis of a terminal illness. The terminal illness means the doctor say you have 24 months or 12 months to live, depending on the insurer. Second is total and permanent disability. Is if you're not able to work in any occupation through a disability, you can get payment. Third is trauma. If it's you get a sickness, illness like critical illness, trauma, like heart attack, cancer, or stroke, you can get the money. Okay? Income protection is if you um, cannot work due to sickness or injury, and you can get a monthly benefit up to 70% of your salary or your personal exertion income. That means if you don't work, you don't get the income. Okay, and then it can pay up to a benefit period up to say, for example, 65 years old. Um, and then the last one is called active cover, which is like a three-in-one package. It covers life, TBD, and trauma as one product. So out of these five major insurance options, there are life, TBD, and income protection can be 100% funded via super. So it can be 100% paid through your super money, not through your own money. And then active cover can be partially paid from your super money. Okay. Obviously, if you use your super to pay for your insurance, your super balance will be eroded, right? So you need to be prepared if you want to take that path. Although it saves your cash flow, but it will reduce your super money. Okay. So we want to make this very transparent so that you understand your different options. And then there are some other deductibility. Okay, I want to talk about the deductibility as well. If you own income protection outside of super, you can get the premium tax deductible for your personal tax, marginal tax, when you actually do the tax return. Okay, but money insurance inside super, you can get 15% tax offset. So if you say your premium is $1,000, if you pay the insurance premium, life insurance via your super, and then you only roll over your payment will end up be $850 because there are 15% tax offset. Okay, comes back to the insurance again. Why do we need life insurance or personal insurance when we already have Medicare and private health? Probably a lot of people will know that with Medicare, private health, you don't get money. But with the personal insurance, although it's the same sickness, you can get money. And the money can help you pay off the debt, children's education, lifestyle renovation, or expenses outside of hospital. Okay, or even as a family funding, you can invest it for passive income. And the principle is that the younger you are, the cheaper the premium. Okay, the healthier you are, the easier you can get protected because you need to go through a medical underwriting process. Some insurer does not require you. We're gonna go through that, which is called the default insurance. If you work for an employer and then you go to the employer set up a default insurance for you, you don't need to go through the medical questionnaire. But in the event of a claim due to the medical underwriting, and they might postpone, reduce, or even decline your claim because of any pre-existing condition. And also, it's very easily lapsed due to certain scenario. For example, if your balance is reduced under $6,000, or if your um, have not contributed to your super for more than 16 months. This, for example, different super has different rules, but generally, if you meet that condition, your insurance gets automatically canceled. Or, for example, if you roll over from your super A to super B, or from super A to your self-management fund, then your default cover will be canceled automatically. Okay. I listed a comparison for this. So what we normally call the default cover by the media is called junk insurance because it's easily lapsed. Okay, and also it has no option to link trauma. It have no upfront medical underwriting, uh, and also very important. The default cover is normally decreasing cover. Decreasing cover means as you grow old, your cover amount gets reduced on a age-based level. So as you grow older, say for example, you have 400,000 in your super right now at 30 years old. When you reach 60 years old, your insurance cover may already be reduced to probably 40,000 or even 10,000, even to zero. So that's the nature of that default cover. And also the simple definition of TBD, any occupation. What does TBD, any occupation mean? It's very hard to claim if something happens. I've got a client because we not only do the financial advice or the insurance advice, we also have a service in my other company who does the home care or disability care through NDIS. So I have a NDIS client that he's got a quadriplegic. He cannot move his hand and the leg. He's using the car, the auto wheelchair, and he trying to claim the TBD inside super, but he failed. The reason being is insurance company said you still can work as a manager. He's using his head, not his hand, to use to do certain job, so he can still work. So that so that's why he cannot claim. Even quadriplegic, he cannot claim TBD. So that's when I say um, default cover. It needs to be reviewed, and it can be replaced by comprehensive cover. Is another option, and comprehensive cover can also be held inside super, and the premium may not necessarily be more expensive. Sometimes it's even cheaper than the default cover. And I've had experience that even I think 50%, 40% cheaper than the default cover, depending on the client's scenario, depending on the client's age. But that's very true that we need to have the different options. Also, you can resolve the problem that with default cover, for example, you can have comprehensive coverage. You can link it outside of super to trauma, even not any occupation, but own occupation. Own occupation means if you cannot do your own job, you can already get claim. I'll give you one example you understand. or a surgeon who does the operation with his hand. In the event he cannot use his hand, if, for example, he got Parkinson, he cannot, he is shaking, cannot do the operation, then if under own occupation, he can make a full claim. But his claim would be declined if he's under any occupation because he may not be able to do the operation, but he can still find another job, say in teaching or in management or admin, whatever. He can find some job. So that's the difference they make for the occupation. Is very, very important. Also, it's all upgraded. As long as you don't cancel it, you don't reduce it, the cover stays the same and it can be auto upgraded. For example, with the active cover, normally I think a few years ago it was 168 condition. Later on, they upgraded to 169. If you bought it at the time of 168 condition, you get automatically upgraded to 169. That's how good this comprehensive upfront underwriting insurance it is. Okay, it's also called retail personal insurance. Okay, um, so same thing, insurance paid, but have different definition, different quality, and you need to be aware of that. Otherwise, in the event that you need it, you may not be able to make a claim. Very important essential protection strategy. Okay, a lot of people buy a house, they have a mortgage, and they need serviceability. I ask my client a lot of time, what's your most valuable asset in your life? A lot of people say, my house or my car or my money in the bank. It's wrong. The most important asset in your life is your ability to make income, your ability to earn money. Why? If you go to a bank, what the bank asks for when you borrow money, it's your income, it's your serviceability. It's not how much money you have, how much asset you have. It's not only that. Most importantly, they want to see how much money you can make as a proactive money earner. So ability to make money is very, very important than anything you have. So, and you need to protect that. How can we protect that? If we don't have the ability to make money, we may not be able to repay the ongoing debt. And if we cannot repay the ongoing debt, we might not be able to secure the property. Not just the property, but the lifestyle, but the security we have with our family, right? So protecting your income, your serviceability is very important. How do we do that? Okay, we can transfer the risks to insurance company. So through insurance, we can do that. Even in the event we're not able to make money, even in the event we pass away, our debt, our future income can be replaced by insurance. Insurance can clear the debt for us so we can have a secured house for our loved ones and for people who are important to us, right? Okay, I'll give you one example. This is the case study I did for my dentist client. It's one of the largest dental group CEO is my client, and I just use a different name. 34 years old, non-smoker. I just want to give us an illustration of what it looks like in terms of someone who buy insurance at certain age. He's earning 200,000, wants to buy, utilize his super to reduce the cash flow impact and take advantage of the tax benefit. Okay, so he wants to buy 1 million life, cover the mortgage and the dependent, 1 million TBD to cover the mortgage and also replace the income, 1 million trauma to cover medical expenses, as well as replace the future income in the event of not be able to work full time. Also, income protection provide to protect future cash flow needs. Is a non-smoker. Okay, it's very important. Smoker and non-smoker rate are very different. Even double the smoker rate would be more expensive than the non-smoker rate. Okay, we just did a quote. This is just for illustration only. So he uses super to pay for $1 million. Super money would be $401.21. So that covers 1 million death and 1 million TBD. Okay. The trauma cannot be paid inside super due to condition of release. And that 1 million trauma is about $1,015.46. Okay. And income protection, he used it, the structure under personal, not instead of paying inside super. Later on, I'll show you why he does that. And the total non-super payment is about $3,194 for the premium. The total would be $3,595.83. And it's called a step premium, so which means it will grow, increase as you grow older. Okay, as we can see here, $472, but it's got a 15% discount, so it only charges $85. So the actual rollover is about $401. Okay, on top of that, Hippo Wealth is a plus advisor. This is we're using Super Zurich, which is the top three insurer in Australia. So Hippo Wealth is like the plus advisor. We can have additional 5% of the Zurich discount on top of all other discounts. Okay, and also we can have access to the service one team uh, that's especially supporting us as a plus advisor. Okay, for the trauma, it's about 1,000 for 1 million, and for the income protection, that's what I want to show you. Because he's paying about $2,000, $2,179 for the income protection, based on his income of $200, he can save approximately $1,024 for the annual premium at the tax return time. Okay. So, and this is based on the 30-day waiting period and up to age 65. So in the event of something happen, he's not able to work, he can still have income. He's only 30, 35, 35 years old. He's 30, 35. He can have benefit pay as long as he is 65 years old. That's like over 30 years, right? About 30 years if he's not able to work. And that's how good it is. Even at the time he's not able to work, he can still receive 75% of his income, which is $11,667 monthly income until he is 65 years old. That would be considered passive income, isn't it? And that can support his lifestyle and repay the monthly financial obligation and dependent, and to keep his life as usual. Okay, so now I think this is the case that I have mentioned. Um, this is the case that I want to mention so that we have an idea if you use super, not use super, to actually use to actually repay your debt and to protect your income and protect your loved ones. I want to leave some time to see if anyone had any question or ask Jack to ask me some question to interact instead of me just talking, because there are so many case studies, so many scenarios, so many different information, valuable information. We may not able to cover all in one session. But what I do want to give all our Tiger member is a free financial health check. It's totally free. These are the free, also the discount and free service that we provide for Tiger member. One is free financial check. If you want to do a stress test of your current um, financial situation, we can help you do a financial check, just like if you go to a GP to do a general health checkup. And then we do a free insurance and super comparison, insurance comparison service, whether it's private insurance, personal insurance, or general insurance, can help you do a free comparison. We also can help you do a free super comparison. So we use ATO portal to help you do a free super comparison service. So you know whether you are a group super or whatever super you are, we can look at whatever you're paying right now, insurance premium or account keeping fee or even other related costs, Also, we can look at the history performance and see how it looks compared to other providers. And then we have a non-obligation 30 minutes general financial advice service. And if you ever need any help on certain topics, we can help you. It's free, non-obligation. By any chance you need any insurance service, we also provide 5% lifetime discount on the premium. Condition applies depending on which cover you use. Also, we provide free insurance management and claim service. So if you ever need, already have insurance and you need somebody to look after you, to have a review, also to respond to your ongoing inquiry, it's free. We can help you look after that. Just like you have property, you maybe go to a property agent, but they charge a property management fee. We don't charge you any insurance management fee. We help you provide you with free insurance management and claim service. This is very important. We provide free claim service. Okay, even with NDIS disability home care, it's totally free to our member. We trying to make it easy to access, make it cost effective, so that we can help more people, because we know a lot of people, they lack this information, lack this knowledge. Also, they may not able to afford to pay to see a specialist. We're trying to make it possible so that you can have access to these resources, to this information. On the right side is my personal contact detail and my email, and also our English website called hippoinsurance.com.au. I also have a bilingual website called hippowealth.com.au. Underneath is my WeChat QR code. If you ever have a WeChat, feel free to add me as a friend, and also so that I can answer your inquiries uh, personally. Um, so we have a team in Sydney, Adelaide, Melbourne. We have partners in Brisbane and WA. So wherever you are, we're trying to help you through virtual service or over the phone. So I'm just curious if anyone has any questions, or Jack, do you have any questions that you wanna you know have a Q&A?
Yeah, sure, absolutely. And also I just want to share something as well. So when we talk about life insurance, it's always good to get it early because as our age grow, it may not be as easy to get the life insurance when we think we need it. So personally got a client that he's very healthy. However, some time ago that he had a bit of unknown headache, and he did all the MRI checks and everything. There's no issue. However, just because they have that on the record, and when he actually tried to get the insurance, and then he got rejected, and now he's still struggle to get a life insurance that he think that he needs to protect his families and his children. So and also, even though insurance is an old industry, however, there aren't that many practitioners in Australia. I think only a few hundreds compared
Yeah.
to the financial advisors. We're talking about 15,000.
Mm.
Insurance broker only got about a few hundreds in Australia wide. So
About 300.
what
300. Yeah.
300, yeah. So what that really means is, by now, because you are a Tiger Brokers member, a Tiger Broker client, and therefore that's why we invite Jeffrey to give easy access to our clients to the insurance service. So if you have any questions, please either feel free to get reached to Jeffrey directly, or or speak to one of our Tiger consultants, and then we can make a friendly referral as well. Okay, and then we see. Yep, and then we'll see if we got any questions.
Yeah, see if you have any question, you can ask me. What Jack was saying is very important. The other thing I probably want to add, which we discussed last night with the last one seminar, is at the time of cancellation, a lot of people, they might bought insurance for many, many years, and they decide to cancel the insurance. a lot of people, they don't know, they don't understand, and they just cancel it. It's very important for you to do a thorough health check before cancellation, because what happened is, this actually happened in my industry, among my colleagues. Actually, is he canceled his insurance, and then 2 years after he was diagnosed with cancer. Should he had a thorough health check, he might discover he's got a cyst. Uh, that's something risky to his health. He might not. He might decide not to cancel and still keep insurance for another few years. But if, because he didn't do the health check, he just cancel it. He cannot put up with the premium, or he just think he doesn't need the insurance. He just cancel it, and then once he cancel, it's very very hard to get it again, because every time you apply for a new insurance, even after you cancel, you need to restart the process, and they look at your age, look at your health condition, pre-existing condition, and if you apply for cover over a certain threshold, you need to do a complete, like blood test exam, fast exam, all that, all that examination, health examination, and you may incur loading, exclusion, or even decline. So that's why the cancellation is very, very important for you to go through your health check. And um, having said that, if you're on a stepped premium and your premium has gone really high when you get older, say I've got a existing client who was with MLC, and his insurance has gone from 10,000 to 50,000. He's about 59 years old, and he cannot put up with the premium. For 50,000, that's so high, because he's only earning over $200,000, and then he's paying too much money to the premium he cannot put up with. So he comes to me and seek options to reduce premium. And what we can do is we can look at the policy and see if there is any existing loading or exclusion, and then use that, and also ask the client if he has any pre-existing condition, and then we can speak to the insurer and to do a pre-assessment, and to see which insurer can take him with a lower premium. So all these things we can do to help you compare and save money on your premium. So there's not always either you buy insurance or cancel. There are other ways to keep your insurance while, leverage, and reduce the impact on your cash flow. There's another clause a lot of people don't know, is you may have a premium holiday. What that means is, if you cannot, if you lose your job for a few months and you're looking for other jobs, that you want to stop paying the premium for a few months, but you don't want to cancel it, you can apply for a premium holiday, so that you can still keep your cover in place, but just stop paying the premium for certain months, and then reactivate your policy after your income comes normal. Although you're not covered during the suspension, but you don't have to reapply your cover. This is very, very important. So my goal, and a lot of people say, okay, how much money should I spend? How can I have the right cover? I give you a golden rule when you trying to buy insurance and set up your protection. The golden rule is, use the money that does not impact your lifestyle, and to prepare a long-term and comprehensive coverage, so that at the time you don't need the insurance, you can cancel it. You don't need insurance. Your children may grown up, you're dependent, you no longer have dependent or financial dependent, and then, or spouse. Secondly, your mortgage has been repaid. In Australia, most like generally, mortgage has 30 years repayment period. So when you're 30 years old, you should have your mortgage repaid by 60 years old. And normally we pay it earlier, because you want to save more interest. So when you don't have that, and you don't have children, and you don't have active income, which means you retired, you're close to retirement, so your needs for protection may reduce. You don't have to keep buying insurance until you're 99 years old, because some insurer covers you for 120 years old. You don't have to buy that to that, that long. You can, but that will increase the premium. But if you don't, your situation have changed, like your dependent, your mortgage, your what do you call your income, ability to earn income, then you can adjust your cover at the time that you feel you don't need that, right? But during the between, from say 30 years old to 50, 60, 65, you're still working, you still have dependent, you still have mortgage, then you might need it. So I try to make my clients understand the core logic behind this insurance and investment. It's all linked. You have property, you have mortgage, and then you have insurance. You have income, you have wealth creation, you have risk management. So all these things come together. Even with Tiger, they provide a program, a platform for you to buy shares. It's part of the wealth creation. You make money work harder for you. You choose the right share. If you choose Tesla or the other, so you might make money. But what I'm saying is, on one hand, you have wealth, money work harder for you. On the other hand, you have the risk transfer. You don't take the risk. So you can have true security and peace of mind. Even something happen in between, you know you still cover. You still have a backup plan. This is very, very important, because if you only do one thing, invest, 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 and something happens, or work, 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 work harder, if something happens, you lose the whole thing. You lose the whole thing, the castle or the empire you have built for, and that's not the wisest wise thing to do. The wise thing to do is to prepare for the risk, is to plan for the future, and have the right person uh, along your side to protect you, to help you if you need anyone. So this is very, very important. I think building that mindset is even more important than actually choose which cover, because without the mindset, you would not be able to have even the momentum to even think about these particular topics, insurance or super or investment. So I think um, today, I'm really thankful and grateful for Tiger Broker to offer this opportunity for me to share my philosophy and to share the understanding, the knowledge that we are in an ecosystem. We're in an ecosystem where you don't just choose one vehicle. You need to understand where you are. You need to understand where you're going. You also need to understand what's in between, and you need to prepare. So I have a poem that I read yesterday. I wrote it in Chinese. It's like wealth management is like planting a tree. You need to choose the right soil, right seed, and right farmer. To make it more rhyme, you just choose the right farmer, right soil, and the right seed. And the tree, right seed. Okay. The third one, you also need to prepare for any risk, and also you need to grow and nurture your um you need to grow and nurture your tree to have the fruit. Okay, so this is very important, and I hope that you have this as a reminder or as a resources. So I think Tiger Broker, they have so many um, resources in this field, and also with our financial media called Riches Review, we have a lot of Tiger Broker information on the education piece as well. So we are all on this journey of education and wealth resources, and I hope that you can take on board and help you with your financial freedom building.
Okay, thank you, Jeffrey. And let's check that. Seems like there's no other questions. So we'll just finish for now. And thank you, Jeffrey. And we look
Okay,
forward
thank you very much.
for the next
Thank
webinar.
you, Jack. All
Okay,
right, thank you.
thank you,
Have a
Jeffrey.
good day. Thank you,
Thanks,
everyone.
everyone.